Let me just give you a quick introduction of Fintech. So we are a volunteer-led community connecting France, tech ecosystem, and the GA. We were founded in 2019 and is a non-profit organization. Together we have entrepreneurs, we have innovators, leaders, etc. So we bridge the French innovation with one of the most dynamic tech hubs in Asia. Again, thank you everyone, and I want to give you some news from the French Tech. We have recently revamped our website because our community is growing and we want to give everyone updated information and everything we need in the GDA for your company to grow and thrive. So we have prepared a video to show you what the new changes, the new face, the new look of our website. I hope you enjoy this video. This video is powered by TradFi.
The new La French Tech Hong Kong Shenzhen website is live. Discover upcoming events across Hong Kong, Shenzhen, and the GBA. Meet our board and connect with the people behind it. Reach us easily through our contact section. Join our community in one click. Explore our GBA white paper for key insights. And check podcasts for interviews and success stories. See you soon online.
Okay, so again, thank you so much, Florian and the TradFi team for this amazing video. Nicolas.
The new La
So if you are not part of our community yet, so I strongly recommend you to join us. So here is our WhatsApp group and WeChat group. So I give you a few minutes and moments for you to scan and join us. So I hope that you guys will be one of us. We will be very happy to have you. Thank you.
Yay.
So we have our Vice President Ludovic from all the way from Shenzhen to join us tonight. And we also got our other board members. David, where's David? David over there. Abed, where are you? Yeah, thank you so much for coming and for having the event. And of course, tonight why we have such a wonderful place is thanks to Compact Offices. So a big applause for the Compact Offices team for having us, being the sponsors of our venue tonight. And then, of course, tonight we got the refreshment and drinks area is thanks to our very generous sponsors, AWS, System in Motion, and Theseus Solutions. Thank you so much. May I have AWS to come for a moment? Raul, would you like to come to stage? Yes, thank you so much.
Hi everyone, I'm Pearl from AWS. I'm with the startup team in AWS. And so at AWS, we supported over 350,000 startups globally. And 80% of the unicorns worldwide are AWS customers. So we basically penetrate all of the unicorn market throughout the globe. And yeah, I personally will be very happy to support you in your startup, scale up, whatever journey as well. We have had experience in cloud and AI for many decades already. And I'm sure a lot of you have used AWS, but would love to get our support, especially our credits, then you can also come to me. And our solutions architect, Dexter, will be speaking on some AI agent topic later as well. So yeah, feel free to come to me and just let me know whatever help you need from AWS. Thank you.
Thank you so much. May I also have Stefan, System in Motion, to give us the word. Thank you.
Thank you, Sharon. So my name is Stefan Monsali, I'm CEO and founder of System in Motion. We help companies understand AI because everybody is using AI, but everybody is using it wrong most of the time. So we concentrate on education, consulting and integration of AI into companies' processes to make them more efficient, to make everybody more efficient. But we do it with a human-centric approach. We don't want AI to replace humans, we want AI to empower humans. So if you disagree or if you agree, feel free to come and discuss with me. Thank you.
Okay, standard. And then as a solution, thank you, Nicolas.
Thank you very much, and thank you to the French Tech for giving us the opportunity to be one of the speakers tonight. Theseus Solution, we are a consulting firm and we provide consulting services to corporate clients looking for the best banking and payment solution. So that now in the world of today, the range of solutions in terms of banking is quite wide. And so we have a team of former bankers, so they are insiders who know the way a compliance department works in a bank. And we have a network of more than 200 banking partners in more than 20 jurisdictions. So our role is to analyze the need of the corporate clients and to implement the solution with one of the banking partners we are working with. Thank you very much.
And of course, without our community and supporting partners, we won't have tonight's event. So also thank you Invest Hong Kong, thank you PNT. Thank you Women in Web3 Hong Kong, with Melizza and team, thank you so much. And then DF Group, Candid, thank you. Lunatex, Jason, where's Jason? Yeah, thank you Jason. Ping Pong, we have Tom. Thank you Tom. Gateway Private Markets, we're covering. Thank you. And Epi Solution is one of our partners who have all this refreshment, right? One of them who provide us tonight's very yummy food. And then we have the best happening across Hong Kong and the GTA. And also we want to know where AI adoption is accelerating fastest. Questions like this, who will be the right person and, well, say, the good person to ask for? Definitely we will want to ask Peggy Kwok from Invest Hong Kong, Senior Vice President of Invest Hong Kong, to give us a speech. Thank you.
Thank you, everyone. Thank you very much for the French Tech to give Invest Hong Kong the opportunity to share what we do and give you an overview of the Hong Kong Fintech ecosystem and some of the challenges that we are facing in the financial services industry in adopting AI. So Invest Hong Kong, we are a 100% Hong Kong SAR government department. We sit under the Commerce and Economic Bureau. What we do is we support international companies and Chinese-mainland companies to set up and expand their business in Hong Kong across all sectors. Our services are completely free of charge as part of the government services. So I myself look after the Fintech team within Invest Hong Kong and Europe and GCC online markets. Okay, so here I'm going to give you a quick overview of where we are in the Fintech ecosystem in Hong Kong. We have now 1,200 Fintech companies, 8 virtual banks or digital banks, 4 virtual insurers, and we have right now 11 homegrown Fintech unicorn in Hong Kong. And some of the names can be listed here, can be seen here. They are Hashkey Group with VATP in Hong Kong. Wallet, everybody knows, is a payment tech company. ZA Bank, our digital banks, one of the digital banks here that got a license. And WeLab Bank, which offers a lot of digital bank solutions and credit for SMEs, for individuals too. So to understand the opportunities for AI and fintech companies in Hong Kong, we need to know what the challenges are facing by the financial services industry today. So the Hong Kong MA has recently published a 2030 fintech roadmap, and they have done a number of surveys with the financial industries in Hong Kong, and let me share with you some of the highlights here. So the Tech Mature Stock Take reviewed that 95% of the surveyed banks, including retail banks in Hong Kong, we have adapted some sort of fintech in the end-to-end digitalization of banking services. And here you can see the breakdown of the fintech in the subsectors. How do they adopt the fintech solutions in different verticals? So we can see RegTech, it's quite integrated in the financial services industry. It's ranging from cybersecurity, risk management, customer onboarding, to product due diligence, etc. For wealth tech, the banks are looking into providing more global advisory and low-cost wealth tech solutions in the wealth tech space, in the wealth management space. For InsurTech, we're looking into how do we digitalize the whole value chain in insurance for the policyholders, from underwriting for the banks to claim automation to, for example, enhancing the customer experience, especially on the omni-channel sides, so that they can offer better services to the insurance policyholders. And green tech, we can see there's 26%, so we can see that nowadays ESG is a big topic, right? So banks are very aware of sustainable finance and climate risk management, and they're integrating technology in their services as well. So in terms of AI, we see the adoption has jumped up quite a lot, from 59% in 2022 to 75% in 2025. And actually, we can see that the big banks, the large banks, they have higher AI adoption rate compared to the smaller ones. I think the smaller ones, it's about 60-something%. Medium-sized one is 70-something%, and the large banks are over 90%. So you can see that AI, of course, it depends a lot of the financial resources of the banks, whether they can adopt AI or not. So we see that in the financial industry, the adoption of AI, we have transformed from traditional AI, which emerged in the early 2000s. They are more analyzing structured data, providing a prediction model, and giving solutions for example, fraud detection and credit scoring. And then it has gone to Gen AI solutions, where the AI is generating novel insights, so that they can help banks with a lot of AML onboarding or transactional monitoring, and then, for example, deepfake solutions that help banks to tackle deepfake attack, etc. So now I think we are sitting in this area where we're transitioning to agentic AI, where the agents are autonomous. They can do autonomous monitoring and the decision making, and then also help the banks to execute different solutions. So these will be give rise to interesting solutions such as real-time fraud detection, and then also be able to freeze the accounts that is in question when we detect something anomaly in the transaction process. And then we can also see some multi-agent loan approval process that can identify do identification, ID identification, risk scoring, and even automatic disbursements of funds. So the human role is always in the loop, but we have transformed from an operator to a manager that oversight the whole process. And one interesting thing that the HKMA review is that actually smaller banks, they can actually from in agentic AI solutions because they have more urgency to achieve ROI to get their AI investment back, so that they can really spend on more, AI, agentic AI on some low risk and repetitive tasks for them. Okay, so these are the fintech adoption challenges that are faced by the banks in Hong Kong nowadays. Of course, we have high implementation costs. Sometimes AI, the banks, the smaller banks, they don't have the financial resources to invest in the computational power. So sometimes they still find the cost quite prohibitive in adopting AI. And next, we see that there will be, of course, risk associated with the new technology. Whether you are onboarding a third-party solutions provider, if they have a vulnerability in their solutions, it may introduce vulnerability in the upstream supply chain, and then it will affect the downstream banking services. So these are the some of the risks that the banks have to face. They need to, when we are moving to an agentic AI world, we need to really think about whether they have the processes, they have the upskilling of the staff in place to tackle a new era of fintech evolutions that will bring a lot of cybersecurity risk. Of course, integration with existing system, it can be very challenging for banks. Sometimes a lot of time they have to deal with legacy system. The data management, it can be batch oriented. It's still very batch output processing oriented. Whereas AI, you need to really see the real-time information. And so to bridge the legacy system, the banking system, to the new system, it's of course involve a lot of cost that the banks need to look at. And of course, data privacy, when you have to train a large amount of data, whether you would infringe on the data privacy right. And now the banks have to really look in a lot of transactional, some biometric, different kinds of data they need to deal with. Of course, banking tech in the space of data management will be very useful to them. And then, of course, the regulatory landscape. Right now, the governance and the oversight framework put in place by the regulators, they are more focused on generative AI. So agentic AI, they're working on it, still hasn't published. Of course, the banks, when they put in place new system, they have to think whether they are applying to the regulatory set standard, whether they meet the supervisory standards or not. And then shortage of AI talent, so that I think La French Tech, maybe you guys can provide a lot of French AI talent to help us in this field. It's hard to find talents that combine technical expertise, regulatory knowledge, and also business acumen. It's hard to find, you can find individuals with individual skills, but combining them is not easy. And of course, you need very high quality and the available of data. It's fundamental to roll out AI solutions or more advanced fintech solutions that we just touched on just now. Okay, so these are more specific barriers to AI adoption. Right now, the survey find that the standalone tool, the AI implementation in the banks now, they are more focused in standalone tool implementation, meaning that they are not really transforming the core operating system. To have that transformational benefit of AI, really need to have AI impregnated in the whole core operating system. But so far, the adoption is quite standalone. on individual business units. So we need to see how we use AI to transform the whole banking operating system. Of course, these are not unknown to experts. AI is prone to biases, therefore resulting skill outcomes, and it can be prone to hallucination, etc., etc. And governance framework we talked about. Technical complexities is about how we bridge the legacy system to the new system that we mentioned. So there may be a lot of software incompatibilities and fragmented data infrastructures that the banks have to deal with. So the blueprint for Fintech promotion 2030, published by MA, identify 5 enablers. AI being one, DLT, distributed ledger, blockchain technology, another one. And then, of course, AI is closely related to high performance computing, where you have, the computer now can do a lot of parallel processing with very large memory capacity that can do computational work that was not possible before by desktop computer. So these will give rise to a lot of real-time financial analysis, enhance the high-frequency trading technologies, and also really can do fraud detection with immediate market insights and transactional data very quickly. So for the foundation, we need very good data management and availability of data. Cyber resilience we talked about just now. Fintech 2030, so we have 4 pillars that we put emphasis on. One is on the data and payment infrastructure. This is a DART framework. D stands for data and payment infrastructure. A is artificial intelligence, tokenization finance, and enhancing business technology and quantum resilience. So the HAMA wants the bank to move to post-quantum cryptography. Sometimes it may have to involve moving the cryptology from the archaic one to the new quantum prepared one, so that they can be resilient for cyber attacks, vector attacks that may come in place with the quantum technology. Okay, so our financial regulators, they put in place a number of sandboxes for technology providers, fintech, and banks to work together so that they can test their solutions in a controlled environment before rolling it out. So these are the first two cohorts that are already rolled out. This is championed by the Hong Kong MA. Now we have a new cohort where the Hong Kong MA invited the SFC, Insurance Authority, and the Agri Provident Fund Schemes Authority together. So all the regulators are standing behind these sandboxes. So interested AI fintech solutions provider, if you want to get into the program, you need to find a bank partner to submit a joint application to this program. But this is closing quite soon at the end of this month, but I'm sure that this will be on an ongoing basis. And actually, the Insurance Authority, InsurTech, is also taking place very fast in the industry. These are the 10 insurance companies. We have AIA, AXA, BOC Life, China Life, China Taiping, FWD, HSBC Life, Manulife, Prudential, YF Life. These are all the big insurance companies that will join this cohort. So they committed to building a center of excellence, of AI excellence in Hong Kong, and to share industry best practices, to share their AI journey, how they work with the ecosystem, the regulator, the fintech technology providers, the fintech solutions provider together to help them really optimize their workflow and drive transformational changes in the AI industry. So interested fintech, InsurTech, you can also look out for these 10 insurers. So in terms of government funding for AI, it will be mainly for smaller scale companies. It will be given by Hong Kong Cyberport and Hong Kong Science and Technology Park. Cyberport has a computational infrastructure supercomputer center that allows technology partners to use their supercomputer infrastructure to roll out the solutions for banks in partnership, in co-development partnership with the banks. So Invest Hong Kong, what we do, we help company planning, we do this setup, launch and expansion. Please speak to me if you are interested in setting up a business here. We can offer the services as appropriate. This is my contact details, and thank you very much. Merci beaucoup.
We are moving from the macro landscape to the intersection of TradFi and Web3. So we're a space that you want to know more about compliance or custody, hybrid architecture. So please welcome Melizza, co-founder of Women in Web3 Hong Kong.
I'll be staying here, unfortunately. Good evening, everyone. For the last 15 years, we have watched two financial worlds develop in parallel. One side coming from the institutions, banks, asset managers, payment networks, clearing systems, and regulated markets. On the other side, you have the internet, meaning Bitcoin, crypto networks, open source protocols, stablecoins, and decentralized finance. For a long time, the conversation was framed as a battle. Would Web3 replace institutional finance? Would institutions resist it? Would open networks remain too risky, too volatile, or too hard to regulate? But I think that framing is now outdated. The more useful question today is not which side wins. The real question is, what happens when the strengths of both systems start to combine? Because traditional finance brings trust, scale, customer distribution, risk controls, and regulatory structure. And Web3 brings programmability, 24/7 settlement or atomic settlement, shared ledgers, tokenization, and a fundamentally new way to move and manage value. That is why this moment matters. We're moving from an era of opposition into an era of convergence. And the opportunity is now much bigger than crypto as an asset class alone. It is about redesigning financial infrastructure itself. Today, I want to make 3 points. First, how did we get here? Secondly, why this convergence is accelerating right now. And finally, what kind of infrastructure can actually satisfy both sides, the institutional requirements and the original promise of Web3. So let's talk about the 3 eras that we have seen that's changed what people expect from money. To understand where we're going, we have to look at these 3 eras at the very least. The first era began in 2008 with Bitcoin. At its core, Bitcoin was not just a new digital asset for people to trade. Philosophically speaking, it is a technical response to distrust within the centralized system. The white paper by Satoshi Nakamoto proposed peer-to-peer electronic cash without financial intermediaries. That idea mattered because it challenged one of the deepest assumptions in modern finance. What that is that trusted institutions always have to sit in the middle of all transactions. Then we come to the second era, which is DeFi summer in 2020 and 2021. This was the moment when people realized that blockchains were not only about money as an asset. They were also about financial functions. You can lend, borrow, trade, create liquidity, and generate yield on open protocols. And those protocols could interact with one another like software building blocks. That composability was super powerful. It suggested that finance itself could become modular, open, and programmable. And finally, the era where we are at right now is the third one. This is what we know, the institutional era. Institutions are no longer asking, is crypto real? Is it reliable? Should we stay away from it? That question is largely been answered. Instead, they are now asking something more practical. Can tokenization improve market infrastructure? Can digital assets expand product access? Can blockchain make settlement, reporting, asset servicing more efficient? And can we do all of that while meeting compliance, security, and governance requirements? So this shift is paramount and important. The first era challenged trust. The second tested openness itself, decentralization being the core. And the third is about integration. And integration is much difficult, much more hard to prove than disruption because it requires new systems that work across very different expectations. So why is this happening right now? Why is it accelerating right now? Because the incentives have become clear on both on the market side and as well as from the institution side. For institutions, the case is very strategic. It's increasingly strategic. Recent industry research shows that the majority of institutional investors expect an increase of digital asset exposure, and many of them expose a meaningful share of investments to be tokenized by 2030. And that tells us something very, very important about digital assets, meaning that it is no longer about just your regular pump and dumps and speculative exposure. It's now about infrastructure planning, future planning, wealth planning. And why is that? This is because tokenization can reduce operational friction. It can improve transparency and shorten settlement cycles. And it can enable new market structures for assets that traditionally have been illiquid and hard to transfer, such as land and RWA being the solution to that. Or it could be expensive to administer. On the investor side, this means that opportunity is even bigger than simply owning crypto tokens like Bitcoin and Ethereum. It includes the rails behind tokenized funds, private credit, collateral management, on-chain treasury operations, and digital custody. In other words, the opportunity set expands assets and into infrastructure. For the public, what does that mean? The reason this matters is even simpler than that. Most people don't really care whether a process is on-chain or off-chain. What they care about is whether it's faster, it's cheaper, it's safer, and easier to trust. If the conversion works, the benefits that can show up is smoother payments, better financial access, more transparent products, and less hidden friction in how value moves. And this is why this is an inflection point at this stage. This ideology is cool. The utility case is now being strengthened, or there is a demand for it. And the conversation has moved from, should this exist? And now we're talking about, how do we build it well? And what the winning model is, obviously, is not either TradFi or Web3. What we're looking for is a hybrid model. So what does building it well actually look like? And this is a hypothesis from my end. In my view, the winning model shouldn't be fully traditional finance, but it shouldn't be fully crypto native either. It should be a hybrid stack. At the top, you need a familiar customer experience. Whether the user is a retail customer, a wealth client, or a corporate treasury team, or an institutional allocator, they need onboarding, ID verification, support, reporting, permissions, and usability. The average user is not looking for even more operational complexity. In the middle, you need a policy and compliance engine. This is one of the most overlooked parts of the stack. It is where transaction screening, role-based approvals, jurisdiction checks, risk limits, monitoring, and reporting all sit. This is the layer that makes blockchain-based system usable inside a real FI or financial institution. And at the base, you need a programmable settlement rail. And this is where the Web3 side can come in and contribute their deepest advantage of atomic settlement. Blockchains can support and share across multiple parties, round-the-clock transfer, transparent record keeping, and programmable assets that do more than sit passively in a single account. For example, you can put your token assets into one of these protocols and generate yield from that. So hybrid here doesn't really mean compromising on some of the advantages of either systems. What it means here is assigning the right job to the right layer. Traditional finance, its advantage is that it's strong in governance, client relationships, and regulation. While for Web3, it is strong in settlement logic, interoperability, and programmability. So in my view, the challenge is not choosing one system over another. The challenge is designing interfaces between them. And I think that design question will ultimately define the next phase of financial innovation. It is a very lengthy slide here, but in short, what I've analyzed is that from an execution layer, a data layer, and a control layer, you need to set the right parameters and the right rules and the right logic in order for this hybrid design to make sense. If hybrid infrastructure is the model, then custody becomes the most important strategic layer in this model. In earlier crypto cycles, custody was often treated as a support function, something necessary but not really central. But that's no longer true. In a tokenized financial system, custody is where trust, control, compliance, resilience all come together. Think about what institutions actually need. What do they need? They need secure keys and assets. They need approval workflows and segregation of duties. They need to manage multiple asset types across multiple jurisdictions. They need reporting, recovery, audit capabilities, and they need all of them to work continuously because digital asset markets do not close at the end of the business day. And this is why custody is becoming the most important topic that we should be facing in converging Web3 and TradFi. The firms that believe that custody will do well more than store assets will go far in the infrastructure era that is going to become more institutionalized. They create the operating environment that takes tokens and makes them more investable. And this is where we see a useful blend of the old side and the new side. You have the controls, accountability, and reliability of traditional finance, where for Web3 you get the ease, the security of cryptographic security, you got programmable wallets, and new forms of asset mobility. So that means that this combination is not just about safe storage. It's about custody and policies that drive this change. That means security plus workflow plus automation and human oversight and speed and recoverability. So this means for investors, this matters a lot because infrastructure modes are often where durable enterprise value gets built, not only in the product that people see, but in the control layer that they depend on. So this is an illustration of the different importances that I would place on different parts of this infrastructure mode. But all in all, what I'm trying to say is that when you want to address the problem of controls, that should be answered accordingly with policy-driven custody. When we want to address speed in this hybrid model, then the standard should be the Web3 standard, which is always on operations, able to secure, lend, and handle all these assets on a 24/7 rail standard. And when you want to build trust in TradFi and Web3, this is where it's interesting because institutional grants carry that legacy, whereas transparent ledgers are often where the trust is being built in Web3. So in this hybrid infrastructure, actually you need the standards of both. So what does that mean? And under my hypothesis and understanding, the key is to understand that TradFi and Web3 bring different standards, and their models are optimized for different things, and they do different things very well. AI itself is very useful for interpretation, monitoring, detecting anomalies, automating workflows, obviously, and creating exceptions in management and managing complexity. But the blockchain is very useful for recording ownership and different assets and transfer and data. So the rate mental model is not about what is replacing another. It's not about, okay. It's not, okay. So for AI models, they help people think, they help people automate. And my final point is that it's not about choosing one mental model over another. It's finding where each model has an advantage and building a model that is combined and hybrid so that we can build towards a more sustainable financial future. Thank you.
We are moving to the infrastructure. May we welcome Nicolas to talk about payment, multi-currencies, multi-entities, etc., etc. Thank you.
Thank you very much. Thank you very much. Yeah, so now we are going to talk about optimization of payment flow. The first exercise I would like you to make with me tonight is to travel back in time 12 years ago for two different reasons. The first one is that it's the year I arrived in Hong Kong back in 2014. And the second one, it was the beginning of a new regulation in Hong Kong, which was the MSO, Money Service Operator. Now, if you project yourself back in 2014, put yourself in the shoes of an entrepreneur and willing to open a corporate bank account. What would you do? You go in Hong Kong, like any other jurisdiction, you go to a traditional bank, you go to HSBC if you are in Hong Kong, you go maybe to DBS if you are in Singapore, if you are in France, maybe Crédit Agricole, BNP, whatever. But I mean, in terms of choices, it was quite limited. You must work at that time with a retail bank. In 12 years of time, it has changed massively because of new rules in different countries. Now in Hong Kong, you have the new regulation on money service operator. In Europe, you have electronic money institution. In Singapore, MPI. And in many other jurisdictions, now you have a lot of fintechs that can replace, in some ways, the previous work of the traditional bank. So it means what? It means that in terms of regulatory fragmentation, you have a lot of offering, which could be good, but which could be tricky as well. It's just like putting yourself also in the shoes of someone going to the grocery shop. Limited choice, easy. But if you go to a massive supermarket, you have many choices, and maybe you are not aware of the most suitable for your business. So it could be good, but you need to be guided through this mass offer solution in terms of banking and fintech solutions. Also bear in mind that being a Hong Kong company, like any other company in the world most of the time, you can open your corporate bank account in Hong Kong, but maybe you are willing also to open your corporate bank account in Singapore, Switzerland, Mauritius, in Europe, wherever. You have this possibility. You have no limit by law in Hong Kong, but in other jurisdictions as well, to have one single bank account in Hong Kong. You can choose to have your foreign bank account with a traditional bank or a fintech. It could be in Hong Kong or it could be in a foreign jurisdiction. So what does it mean also is that within a group, you can face also the situation where you have a lot of accounts proliferation. If you are a French group, for example, maybe the headquarter will have a banking partnership with Crédit Agricole or BNP. If you have an entity in Hong Kong, they will open an account with HSBC. If they have a subsidiary in China, maybe Bank of China, Singapore, maybe DBS. So you will find yourself with multiple banks, and each of those banks apply their own rules, their own currency conversion, their own settlement timing, their own fees. So you can find yourself within a single group to play with different rules in different countries. So what are the common challenges that a group is facing today? As I was saying, multiple bank portal. Let's say you are working with multiple entities. You can have a login dedicated to each of your entities. We separate login per entity, separate access rights and rules. You have no consolidated real-time cash visibility. Let's say you have 10 different companies, but at no point you can know what is the total balance of your group unless you are using the right tools. Also, in terms of manual intercompany reconciliation, you need to do it manually if you didn't integrate the right automation and the right integrative tool. FX exposure the same. You are working with multiple countries, multiple entities, and multiple currencies. Maybe you will leave a lot of money in terms of FX fees, meaning that anytime you change a currency versus another, you will pay a fees. It's not always very transparent, but you pay an FX fee anytime you are changing and converting a currency over another. And most of the time as well, if you don't have the integrative approach, you will find yourself with replicating the same task because maybe you receive a payment on your bank account, but your ERP is not aware of that, unless you have put the right integration system in place. So what we are looking to do with the integrative approach is exactly the opposite. Try to have a single platform, banking platform, or TMS, treasury money system. Try to have a real-time treasury dashboard that can tell you immediately what is the total balance of each of your entity. Having also automated intercompany netting and settlement, meaning that once you have one of your company that is paid the other company knows that it's automatically recorded in the accounting system of the other company. Optimizing also the use of multi-currency over your group. And everything that you can achieve with that is through this kind of tool like API, bank feeding integration into ERP, accounting and TMS system. Another important topic, I won't be too long on that because I know that we are short in time, but what you can do today with all the automation and the digitalization of the banking system is to organize the access right, segregate the duties of each of your team, and you can make, let's say, different rules in terms of payment. You can have someone doing the instruction of payment, another people is doing the approval of the payment. You can say that, for example, the HR department of your group can prepare the payment of the salary, but they don't have access to other banking information. It's totally tailor-made today. You can make whatever you want with all the fintechs and all the banks that we are working with today. Same for access and authentication. You know that today you have multiple MFA enforcement. You have a lot of tools to secure your banking transaction and the payment flow. It also gives the possibility to the top management of the group, let's say the CFO, to optimize and see all the payment within the group and monitor the position of each entity with no disruption of each entity because they have a full access to all of the banking information and the financial data. So today I'm going to explain you two recent case studies that we had with two clients. The first one is a French large group operating in tax reduction group. If some of you are aware about the Loi Girardin, they are operating in this industry. So what was the situation of these clients? It's a French group that had to pool the investment of each investor through SPV. And this group needs to set up hundreds of companies on a yearly basis. Each of these companies must have a bank account. So when I met the founder of this group 3 years ago, they were working with 5 different banks and they had hundreds of banking tokens, meaning that anytime they need to check or make a transaction, they need to find the right token, make the payment, check if the other entity receives or finds the token of the second company. So really a mess in terms of the management of the payment itself. Knowing that this group, they were making 250K of payment per year within the group. And they had no ERP integration and no feeding in terms of banking data to their ERP. So what it means that over these hundreds of companies, they had no consolidated view of the cash. So imagine you have, I don't know, 500 different companies and you don't even know how much, what's the total balance of the group. You need to log in each bank account to know what is the balance. So total disaster in terms of management and efficiency. In France also you have the VAT, so at that time they had a team dedicated to the payment of VAT for each entity on a monthly basis. So they had 6 staff doing that, only payment of VAT for each of the entity because they had no direct debit at that time. And they had like 5 different banks all applying their own bank fees. So imagine you are doing this number of transactions and any time the bank is charging, I don't know, €2 only per transaction, multiplied by 250K. So imagine the fee they were paying to the bank only for making intercompany bank payment. And of course, in terms of accounting and reporting, it was also a disaster because they had no monthly reporting due to the delay of importing the data from each entity to the accounting system and to the TMS. So what has been done for this client is that first we had to find one banking partner that can accept onboarding hundreds of companies and do simplified KYC in a way to onboard all these clients and apply a monthly fee with a reduced fee and no more transaction fee. So no incoming fee or outgoing fee. So the challenge was the implementation of the solution with the bank willing to onboard hundreds of companies. So it was a little bit challenging, we managed to do it. So meaning what for these clients? Now the CFO and anyone within the group that has access to the banking portal, it just has one login, and with one login he has the access to all the entities of the group. So and they can of course monitor all the payments they are doing internally. Also, this system with the banking partner, we have implemented a solution to have a direct debit of the VAT. So it means that the accounting firm is doing the VAT report on a monthly basis to the tax authorities in France, and the payment is automatic. No more need to log in and make a payment. The payment is direct. No more action from anyone within the staff. And what has been done as well is an integration of the ERP and the treasury management system via an API to the bank of the client. So it means that now, anytime the client with the TMS knows the balance he has overall on the group, but also on each entity. Also, the connection with the ERP means that anytime there is a subscriber, a new client that is onboarded by the group, they know exactly when the payment of the subscription has been done. They know when the VAT has been paid. They know when the investment has been released to the target company. So they can simply monitor everything with one single access. So the challenge was the implementation of the API. In terms of API, you have many systems, many TMS. They are ready-to-use systems. But you have some other that you need really to connect the technical team of the corporate clients with the TMS and the software. At that time it was Keynotes. I don't know if you know Keynotes, it's a French company. But it was a bit challenging. It took 6 months to implement everything, but at the end of the day, now the 3 staff, it's only 3 now monitoring all those tasks, and the client has a full visibility. So we save a lot of efficiency to this client. The second case study I would like to explain to you is more retail. It's a Hong Kong training company. This company in Hong Kong mainly work with French B2C clients. It's an online training company. So you pay a subscription, you have some package, and the payments from the clients are mainly done through credit card. When we met with the client at that time, he was using a retail bank in Hong Kong, and he was using Stripe. Maybe you know that Stripe in Hong Kong, when you receive a foreign payment in a foreign currency like euro, because 90% of the turnover of this group is paid in euro, Stripe will force the conversion from euro to HKD, which means that you will pay a fixed conversion fee. You have no other choice. So at that time, we just realized that this client was paying more than 100,000 USD per fee, per year, of FX conversion fee. So we made an assessment and we said, okay, given the situation of the clients and the fees paying, we try to find another solution. So we have replaced Stripe with another gateway solution. Gateway is the system that allows you to receive a payment by credit card with no conversion. So it means that if the payment is done in euro, then you receive the amount in euro as well on your bank account. There will be no more conversion in terms of currency. And what has been done also with this client is bank feeding and accounting. At that time, he didn't get this solution. So all the transactions made with the payment gateway and with the bank, everything was reconciled on the accounting system of the client, which is Xero. I'm sure that everybody knows Xero in Hong Kong. So it gives also the full visibility of the client on the financial performance of the company. So payment gateway replacing Stripe by, so we have mentioned AirWallex. It's the payment gateway we have been using. You know that AirWallex is an MSO that can offer you like local bank account, also foreign bank account, which was interesting for this client because now the client has a bank account in Hong Kong with AirWallex, but he also has an account in Europe, in the SEPA region, which means that anytime he needs to make a payment in the Eurozone, he's not using the Hong Kong bank account, he's using his European bank account. And he's not paying any bank transfer fee when he's paying Europe to Europe in the SEPA region. So we have saved a lot of money in terms of FX fee as well. Of course, the challenge was to negotiate with AirWallex at that time in terms of pricing, but we managed to do it. And in terms of bank feeding and accounting, we have a direct integration of all the payments between first the client web platform, his banking system with AirWallex and the payment gateway, and Xero with automatic reconciliation, which saved a lot of error and mistakes and a lot of time as well. So, what is the key takeaway of everything I said? As I said on the first slide, the offering today in terms of banking solution is huge, but it could be complex. If you don't have the right expert that is guiding you through the solution you can have, it can really become an headache to navigate through all these multiple jurisdictions and multiple offering. Integration, of course, is the foundation, as we said before. You need to use API, you need to use the right system to connect all these different tools, the banks, the treasury management system, the ERP. Governance also, it has to be monitored from day one because if you want to secure the transaction within a group, you need to assign different tasks, you need to be sure to segregate properly the duties between the different people among your team, and to have a full compliance system designed for your group. So automation is here to free people, not to replace, as Stephanie was saying. It's not using automation to replace people, it's just to give more freedom to be allocated to other tasks within the group. And also what I wanted to say is that scaling payment operation is always unique in the sense that you don't have like a ready-to-use solution. You need to make the right assessment of the need of your company. Given the huge offering, as I mentioned here, we are working with more than 200 banking partners. When I say banking partner, it means Fintech, it means payment gateway, FX broker, liquidity provider, whatever. So you need to make the right assessment to really understand what is the need today of your group and what could be the need tomorrow, because there is an evolution on each group. So important also to make this work of assessment to know what is the right solution for you. So I will be at one of the roundtables today, so please feel free to come to me and to my colleague Julie, who is over there, Julie Chung. We'll be happy to answer your question. Thank you very much.
Nicolas, for the very practical and must know, look at how finance can scale with confidence. So next, we're going to move into the agentic canvas. So have anyone used any autonomous agent right now? Anyone? Yeah? So have anyone can imagine what would happen if we let autonomous agent to make the transaction decision on behalf of us? So right now we have Stefan who will be telling us all the new challenges and things that you must know. Please welcome Stefan.
Can you hear me at the back? Because I'm afraid the microphone will shut down in the middle of my speech. You can hear me over there? All right, let's do it without mic.
Yeah? Okay.
Introduction. Thank you. I need to buy 3 new shirts. I need them delivered on Saturday at home in Shanghai. I can spend the evening going from one website to the next one, or I can ask my agent. So if I have an autonomous agent, he can browse the internet for me and find my product. This is the future of agentic commerce. But on the other side, e-commerce also has an agent, because they don't want to have people replying a chat and telling me there is no stock, you want to show that doesn't exist, or it's too blue, we cannot deliver by Saturday. So at the end, my buyer agent will discuss with a seller agent. And I will give my credit card information to my buyer agent. What can go wrong? Right? Basically, 2 things can go wrong. You can have a very legitimate buyer agent talking to a very shady seller agent and give your credit card information. Or you can have a very shady buyer agent talking to a very legitimate seller agent. And this shady buyer agent will waste all the resources. So think about if your competitor is as an e-commerce website, you launch 1,000, 2,000, 10,000 agents just to keep the website busy. Kind of denial of service in the age of agentic. So how can we prevent that? So first of all, do not give your credit card information to an agent. Do not trust AI with valuable things, because AI will break valuable things. You've all encountered that. Hallucinations, all the issues we are having with agents. So trusting the AI to make sure that I'm sure I'm talking to a very legitimate seller is not an option. We cannot rely on them. I mean, you can give it a try, go ahead. Anybody who has OpenFlow and cryptocurrency, go play with it and give me a call afterwards. Solution number 2 is what? Solution number 2 is to use AI for what AI is good at. So separate both sides into 2 parts. In the top part, my buyer agent is going to do what AI is good at. Meaning having query, understanding what I need, knowing my size, understanding what it means, what Saturday I mean, what means home, what means, what are my requests. And then being able to query your website and understand the reply from another agent. So this agent-to-agent communication can be the negotiation at a very fuzzy level. And then the seller agent, same thing, can provide product information, stock price, conditions, discount. My buyer agents can find my loyalty card. So all these things that are on the negotiation and commercial side, we can let the agent play with it. But when it comes to payments, when it comes to settlement, identity verification, and transaction, no AI, no AI. So we have to divide it in two parts. And so System in Motion, we've partnered with BuyQuest, who is a processor in Europe, a payment processor, and more generally a banking API provider, to try to define what this looks like. Because you need to understand payments, so this is what BuyQuest is doing, but you also need to understand the requirements of an AI and how the whole thing is going to connect. This is where I come to play with System in Motion. So how are we going to make this happen? So first of all, there is a very interesting, in the world of payment, there is a very interesting feature that all the payment scheme and all the payment networks have in common. It's called virtual card. Anybody familiar with virtual cards? Virtual payment cards? Yeah. So that virtual card is great because it can be created on the fly. It can have a limit in time, it can have a limit in the amounts that can be spent. Hello. You can connect it to the payment network, secure payment, and have an audit trail. And if something goes wrong, you can come back and claim your money because there was an issue. So would you give a virtual payment card to an agent? Nah, it's a little bit more interesting. Because we can put all these limits, give it to the AI just for that transaction, just to buy my free shirt. And after that, the agent cannot do anything with that. And if it's a shady seller on the other side, they also cannot do anything after the expiry is done and after the amount has been spent. So this virtual card is extremely useful in our use case for a single transaction. So are there already initiatives? So agentic commerce, we're not the first one to think about it. So you have here the list of all the initiatives. I'm not going to go one by one, but they are usually with one AI provider and then one company that is a payment processor. And all these initiatives have a few things in common. First of all, they are limited to one network. So if it's Visa, then you cannot do MasterCard, you cannot do Union Pay. You're limited to one. And on the other side, usually you're limited to one type of AI. So let's say you have a Visa card, but Visa doesn't have a partnership with OpenAI. So you cannot use an OpenAI agent to pay with your Visa card. Or the other way around, you have a MasterCard, but you want to use Gemini. So this incompatibility, because they are one-to-one, they're quite annoying. And second one, all of them are raising fees, and there are enough fees, right, Nicolas? There are enough fees on transactions. So all of this is adding fees on top of fees, on top of fees, on top of fees. So this is why with BuyQuest, we've decided to design, and we're starting to working on a unified protocol that will be compatible with every scheme, and compatible with every AI and with every agent with zero fees. Sounds like a dream. Yeah. Why is it zero fees? Because virtual card has zero fees. And we're basing all these protocols on existing transactions that are supported by every scheme. So let's see how it works. So let's say my buyer agent meets a seller agent, right? And my buyer agent has a MasterCard and Union Pay. It's compatible with two payment schemes. And on the other side, they support MasterCard and Visa. So for you, it's obvious, MasterCard, right? We can make that transaction in MasterCard. We don't do it in Union Pay, it's not supported by the seller, and we don't do it in Visa because it's not supported by the buyer. So finding the common network. Why do we need to find that network? Because the trust is not going to be built between the agents. Again, they cannot do it, they are just AI, don't trust AI. It's going to be built by the network in the background. So behind these two agents, they are connected to the network via the protocol. Next, all right, the buyer will issue a virtual card that is valid for 2 minutes with a limit of 0 Hong Kong dollar. What can I do with that? With that, and again, I can do it for free on every scheme. Now, what can I do with that? Actually, the seller can do an address check. So we're also going to include the address there. And then via MasterCard, is this virtual card issued by somebody at this address? And the network will say yes or no. If the answer is no, that's it. You're trying to scam me. You don't have real payment needs. Get away from my virtual shop. Yeah. If it's correct, that means all right. That person is really who they claim they are. They have a MasterCard card, and they will be able to issue payment. So I'm willing to continue that transaction with that person because they show me proof that they have valid payment without spending any dollar. There is no exchange there. So it's just an exchange of trust. Now the seller is happy, but what about the buyer? The buyer doesn't know. I also need to establish the credibility of the seller. So then I will receive a message, and I will control the vendor ID. So again, this will come from the back via the network, in our case, via MasterCard. So I'm going to ask the vendor, what is your vendor ID? Directly. And again, this doesn't allow to make any transaction, any exchange of money. And I will compare it with the one I received from the network. Oh, this vendor ID did an address check on your account, on your card. So now I know the vendor is not pretending to be a vendor. The vendor is valid. The vendor is trusted by MasterCard. So I can continue my transaction. Why? Because I know that if anything goes wrong, it really goes through it really went through the MasterCard through this vendor. And I'm going to limit anyway my payment to this vendor. So if anything goes wrong, I can get my money back. I'm protected by the MasterCard network. So now both are happy, my buyer agent, my seller agent. So now I can issue a new car, $250 to buy my free shirts with a validity of 2 minutes, restricted for this vendor. So this vendor can only spend it via the network through the vendor ID. And now I got, so it was not short in my example, it was bag. So now I have the bag and he has the money. So this is a very simplified version of the protocol that we want to create, because again, we believe in free commerce. We believe there's no need to add another layer of fee on top of everything. We don't believe in forcing you to have a MasterCard if you want to pay with OpenAI or the other way around. So if you want to know more, you can scan that QR code and follow our newsletter. So our newsletter is not only on agentic commerce, it's on agent in general and all the AI applications. And if you're interested by the protocol, so if you're a fintech, if you're a bank, and you want to know more, and you want to be part, because we are just at the beginning of the journey, we're starting to draft the protocol and draft the papers. Again, BuyQuest has a very strong footing in Europe, but we need to connect with Asia a lot, because we want to make this a global protocol. So thank you, I hope you find it interesting, and don't hesitate to come to talk to me afterwards to discuss and be part of this protocol we are creating. Thank you.
Hello, can you hear me? So today I also talk about trust, but on other aspect, on more engineering aspect. So this diagram, I think all of you are very familiar. So we are human. We are very obsessed with automation for the last 100 years. This obsession helps us to bring down our goods in a very cheap price, more affordable. So our life is more improved than our ancestors, right? So you see, it's a very typical image of automation, right? So say from A to B, something like that, and we have somewhere there's a logic, or somewhere the goods fail, just put it aside, right? So very, very easy to understand, right? So it's very successful in a very controlled environment because it's deterministic, and also it's not deterministic, it's a stationary stochastic as well, so we can handle it very well. But it don't end like this, right? So think about, can we migrate this automation, a rule-based system, into the uncontrolled environment, say financial market, right? So probably you can see that, right? In algo trading, you apply this rule-based system, is a very, very labor-intensive work, right? So for example, the market shift, your condition change, your core people they understand the market and we apply and adjust another model as well, right? Very labor-intensive. And for example, you have run the KYC with your customer, the rules changes and your conversation actually is unstructured, even more complicated. And sometimes the regulatory rules change for some crypto wealth, right? Suddenly the Bitcoin go to okay, I can do the derivative on it, or later we can do the loans on it. All the rule change, all the pricing change already, right? So all the thing is constructed for the background people, for IT people and operating people, right? So actually we have a team of people to make the thing work. Just like one of them, right? Actually, I was one of them when I was in the bank. So in the last few years, I think we still use a human to fill the gap to make the system still working, right? So it's expensive, of course, right? So in a typical bank, we talk about you want to operate this rule-based system. You have hundreds of people, right? So I was one of them, right? So it's expensive, it's slow because you don't orchestrate so many people, and it's not consistent. For example, as a new people join the team, I need to train the persons, right, to make consistent. But how about AI agent, right? So in the last few years, it's very, very amazing, right? So in 2024, we do the leasing very well with the agent. And also last year, we can apply, allow our agent to do tools, right, last year, right? So, and it can scale as always, right? So you think about, can the agent do more work about automation to make the new business more automatic, right? So we can use less cost to run it. So AI is ready, but can you trust it? It's a problem. So I think in this diagram, many people are hands-on about agents, so you get what I mean, right? So our problem is a lot of security, and the context is so large. Usually our agent system will not behave well, and sometimes, very often, we have the word hallucination. That means all the things is not consistent or what we expected. And if you build a general application on that, it will not be reliable, right? It's not usable at all, right? So how do we do work around this one? So I just bring 3 concepts here. First is determinism, and make it more predictable. And the second one is traceability, right? So you can have the full audit usages or lineages of all the operations, right? So third one is controllability, right? These 3 pillars can make all the things more reliable, and we can build a general application on it in a more consistent way, right? Which is usable. So first of all, talk about the determinism, the pillar number 1, right? So we will want to make the AI agents, right, is still make it, we don't want to make it unpredictable. We don't make it predictable. I mean, it's not a rule-based system. However, we create control here, a deterministic control here, to balance it, right? So to avoid the agent go wild. For example, we are doing Kwok, we want to validate the input output, we have fixed workflow, stuff like that, and also human in the loop, right? So how do we work on that? For example, in the industry, so we have corporate workflow, we have a loop here, right? Just like implement the workflow to make the step more deterministic. And we try to build some small agents such that can control the context, right? To make it more determined. And we have validation, for example, implement some agent for the validation about the output for the mutual user. And we also have the memory and state, make all the contents more consistent, right? So we make sure that all the thing is consistent of what we talk about. And the last thing is tools, for some analytic tools. So there's some well-defined workflow in the past, so we can allow the agent to use it to make it more consistent. So the second here about traceability, right? The blind spot. So think about it. So if without the traceability, actually we cannot measure the correctness of the workflow. And also we can explain the decision why the agent goes to A, not B, something like that. And the last one is to produce the result, right? So for example, if the thing goes wrong, maybe we produce it. So traceability can help you, right? So if we don't have those things, actually we cannot improve our system. So how do we implement it? So by now we have some best practice, for example, reasoning twice. So we log every step such that it is traceable. And we also implement some kind of DAG, that means a graph such that all the steps are more deterministic. We can trace the step and procedure, right? And we also have the version cleaning such that we can control what kind of version and model by the result. And we also have the input snapshot to ensure that, okay, we can expect the context at the same time. And we have immutable logs such that all the things can be changed and we can see what's going on. So last pillar 3 is controllability. We want to build a progressive guardrail on this one. So think about it. So when we start the project, we can implement the input and output validation first for the agent. And we can keep the human in the loop, and we can audit trial all the decision of the agent. So next, we can scale it up. So we try to implement shadow mode such that our agent can run the live data before any execution, just like people train in the finance world. And we also need to control the cost boundary, right? So we control how much an agent present. And also we have the version clean and ensure that live environment, so can we ensure all the steps are consistent. So last one is production. So we will implement the kill switch such that when the progress is going well, we can terminate it. And also we can play testing if anything goes wrong. And also need to implement the chip detection, right? For chip detection, there are many ways to do it. So it's very complicated. It's a little bit discussion. So we can just look at later. So by now, what we covered is 3 pillars. First is determinism. Okay. Second one is traceability, and third one is portability. So actually, on AWS side, we have an agentic AI framework that able to cover what I said before. So last one is our AWS Agent AI. So based on our AWS strong infrastructure foundation, so we create this Agent AI file-layer architecture, right? So for the bottom, you see we have the GPU, AI chips, right, which is supporting all our agent workflow, right? On the top, we gradually moved and migrate the system with the responsibility, for example, reliability, availability, all the things to AWS to manage for you. So you go up layer for layer. So we found that you're more focused on business logic, right? We're talking about for an agent, right? So you have that on this layer. Such that, for example, I want my agent to have a very secure runtime here. Let me have a bedrock agent core runtime to run for you. And we want to have a memory to make all the session more consistent, right? So we have the memory usage, and we have the agent core memory for you, right? And we also have the guardrail, right? So for example, I want to bound my agent behavior. We also have the agent core guardrail as well. And also we have the gateway to ensure that you can access to different MCP services with security, right? So you say, well, how about the user? I want to do an agent, right? But I don't know how to do it, right? So we also have a layer called agent applications. So you have the hero, which is a very generic agent. You have to write the code. And also we have a very specified, specific secure agent to help you to solve a security problem for you. And sometimes user want to customize the agent to when it work, for example, lower latency and also lower cost. Actually, the customer, they can choose our AI infrastructure to customize the agent, train it, fine-tune it as well. We also support you for these use cases. So this is what I want to cover. So let's say for the agent world, right? So don't make the LM mistake, right? Because the value of the LM is not predictable. But however, we can architect in a way that we can make it more deterministic by containing the determinism. And also just like you train an engine, right? So you want it to volatile market, but you want within the risk limit technology. So this is what I want to cover. So I'm still here, so if you want to ask me some questions, so I'm still here. Right? Thank you very much for your time.
Roundtable, so feel free to pick one that interests you the most. So this is for TradFi. I will again showing this slide later. I also want to show you TradC, which is open networking. So remember, we have double refreshment and drinks. So feel free to mingle and discuss with whoever you like if you choose this one. And before this, before we break out into different tracks, we would like all of you to come out and have a group photo together. Can we? Can everyone just come up for a second before we break out into 3 tracks? Let's have a group photo together. Thank you so much.